Hey guys, welcome to Traders Mastery. In this video, I'm going to talk about Larian's most high win rate trading strategy, which is lesson 2 of the previous video. And in this video, I'm going to talk about type 1 of the ABCD liquidity pattern. We are going to use market structure, and we're going to use time zone. I'm going to use market sentiment, which is the Williams indicator. So if you have ever felt like you are playing a game of financial hide and seek with the market, well, get ready to outsmart it with this Larian's most high win rate trading strategy. We are going to dive into the ABCD pattern, like I said, using the Williams percentage indicator. So I will advise you to take your pen and follow up with what I'm going to say in this video. Now, in our previous video, I talked about Larian's type 1 and type 2 liquidity pattern, which I discussed in our previous video. Probably most people were saying that they did not understand what I'm saying, and this is going to be the continuation of what I was saying in that video. Now, first of all, when we look at this type 1 ABCD liquidity pattern, we are looking for 4-hour short-term highs and lows. How is it possible? If a 4-hour creates a short-term highs, all we have to do is to go to the 1 hour and look for when 1 hour short-term is creating a series of highs and lows in the market, and we pair it to the 4-hour order block. Once the 1 hour price hits the 4-hour order block, we look for a selling scenario, and we only look for a selling scenario when price shift inside the 1 hour leg, which is called the liquidity pattern. Now, let me come again. First of all, this can be a 4-hour leg. One price creates a 4-hour leg, which is a short-term highs and lows on the 4-hour. What are you going to do? You are going to go to your 1 hour chart, look for a series of when price is creating higher high and higher low on the 1 hour, which is using the 4-hour for the overall trend of the short-term highs and lows, and using 1 hour as the liquidity pattern to enter into your trade. This high will be the 4-hour, this low will also be the 4-hour also, but inside between this price action, this range, there's going to be a 1 hour short-term highs and lows that the market is seeking to enter into the 4-hour to take out the 1 hour short-term price. This is where you are going to look for a covering. If you are going short at this point, you are going to cover up at this point. So this is what I'm saying. This scenario also happened to the long scenario. Now let's talk about the 4-hour long strategy, for example. Now all we have to do is to draw an order block. This order block can be a 4-hour short-term. This order block can be a 4-hour short-term low. All we have to do is to look for when price creates a high and price is retracing on the 1 hour short term into the 4-hour order block. This is when we look for a buying scenario. So this is going to be the 4-hour leg, and this is going to be the 1 hour short-term highs and lows. So all you have to do is to draw your pattern. Once price break inside this 1 hour short-term liquidity, you look for your buying scenario. So now you understand what I'm saying. For you starter, let me come again. All you have to do, this is your 4 hour leg. Price creates a high on the 4 hour also. Price was busy retracing on the 1 hour short term. All you have to look for is for price to hit this 4 hour PD, which is a discount zone below the market. Once price hits the order block, all you have to look for is to look for a buying scenario inside this liquidity. So let's look at our various example. Now let's talk about this example setup. If you really understand what I'm saying, this is called the 4 hour short-term highs, and this is called the 4 hour short-term low. If you notice, in between this period there was a retracement up, retracement down, retracement up, and if you notice, this was the place we are going to look for our selling scenario. So let's go to our 1 hour chart and see what happened in the price action. Now if you notice, I was telling you about when price is creating a short-term highs and a short-term low. How do we know that price is creating this kind of price? All you have to do is look at what happened after refining this price, this order block to the 1 hour. What happened? Price hit this order block on the 1 hour. On the 1 hour intermediate term highs and lows. So probably if you are not familiar with the short-term highs and lows, the intermediate term highs and lows, the long-term highs and lows, please, I want you to watch my previous video talking about highs and lows, so that it's not going to get you confused in this video. Now let me start. If you notice, this was a place we were in our 4 hour short term, and this 4 hour short term is now our intermediate term highs in the 4 hour, in the 1 hour. Now all we have to do, we can either refine it to the 1 hour order block or the 4 hour order block, depends. So what are we going to do? If you notice, on the 1 hour, price was busy creating highs and lows, creating this ABCD pattern. So this is called uptrend. In this scenario, notice that when price was creating highs and lows into this order block, what happened? On the 1 hour short term, what happened? Price quickly create a trend which you are going to sell off. You are going to look for a selling entry on the 5 minute or the 3 minute time frame. So let's go to our 3 minute time frame and see what happened. If you notice, in our 3 minute time frame, after price hits this zone, now we are in our 3 minute time frame. Now if you notice, after price hits this zone, what happened? There was a market structure change, which is this place, market structure change, the bearish market structure change. What happened? You have to look for a bearish. If you notice, after price hit this order block, what happened? Market structure change. After market structure change, look at what happened. You take out this liquidity, it changed in this zone, which is If you notice, after price hit the zone, there was a huge displacement to the downside and there was a market structure change. What happened? You look for a retracement into the previous low and you look for a exit below the low, which is approximately 3 to 1 arrow if you are going to exit. So this is the first setup, which is the long setup on the EURUSD. Now you understand what I'm saying. This setup was a profitable trade. Let's look at other example. Now this is our long example, which is our buy trade example. This is very simple. If you notice, when price was creating a market structure break to the upside by creating a bullish move up, if you notice what happened, this was a short-term low, this was a short-term highs. What happened between this price action? However, there was a retracement on the 1 hour time frame, which I'm going to go and show you what happened. This is our 1 hour example. If you notice, price was creating a little bit complex ABCD pattern. However, if you notice on the 1 hour time frame, price was busy creating advanced ABCD pattern. But however, this is called a liquidity pattern in the ABCD because there are some trends which I'm going to classify as primary trend, I'm going to classify as secondary trend. However, this is a primary trend and this is a secondary trend, and we also have what is called the 15-minute highs and lows here, which I can see on my end. Okay, now if you notice on the 1 hour time frame, price was busy creating short-term highs and lows on the 1 hour. So however, that cannot be a scaring option to you not to look for a trade scenario using the ABCD pattern, because however this is an ABCD pattern. By creating highs and lows on this process, what happened? You look for a buying scenario at this point. So if you are going to take your trade at this point, you are going to look for the 3-minute or the 15-minute engulfing candle and look for, however, if you are going to take your trade by looking for a buy scenario, you are going to put your stop loss and look for a selling scenario at this point. This is almost 3 to 1 arrow. So this is the setup to the liquidity pattern strategy. However, I'm still going to give you more example on upcoming video, but because of the video is getting longer, so I'm going to give you another setup on the GBPUSD, and let's look on that setup. Now let's look at GBP US dollar, which is the pounds or British pounds US dollar. However, if you notice, this is our short-term low on the 4 hour. Inside this short-term low, what happened? You are going to see a 1 hour short-term highs and lows inside, and inside this 4 hour short-term leg, you are still going to see 1 hour short-term highs and lows inside. This is very simple, guys. This is a very simple setup. All you have to do is to look for your 4 hour and go to your 1 hour time frame and look for when the 1 hour is retracing into the 4 hour order block. So let's look at the 1 hour on how we can be able to take our precise entry. Now this is our 1 hour chart. If you notice, when price was bullish on the 4 hour, what happened? The 1 hour was busy retracing. Price creates a short-term low here, create a short-term high, create a short-term low, create a short-term high, and price take out this our previous low into the other block, which is called the ABCD liquidity pattern, which is going to be A, B, C, D. What happened? You look to buy at this scenario if you are going to take your entry. However, buying at this scenario, you can either use your 3-minute market structure shift. I said it again, 3 minutes market structure shift, or you can use 5 minutes. But however, I prefer you using the 3 minutes for your entry instead of the 5 minutes. However, you look for a market structure shift on the 5 minutes and you place your stop loss, and you look for when price take out the 1 hour short-term highs, which is your covering up. This is approximately 2.7 arrow. So this is the bullish setup for the British against the US dollar. So let's look at our bearish example. This is our bearish setup for the GBP US dollar. So what are we going to do? Like I said, all you have to do is to look for your 4-hour short-term highs and lows first. After that, you go to your 1-hour short-term highs and lows. So what are you going to do? After looking for your 4-hour short-term highs and lows and you mark it, this is a bearish trend, you go to your 1-hour time frame, 1-hour chart, and look for the ABCD liquidity pattern. Now this is what I'm saying. This is the 1-hour setup, the 1-hour chart of it. So all you have to do is to mark your ABCD liquidity pattern on the 1 hour. Now this is the 1-hour chart of the previous 4-hour short-term highs and lows I showed you earlier. So this is the 1-hour chart. Now all we have to do is to look for our ABCD liquidity pattern, which is called the ABCD liquidity pattern, into the 4-hour order block, which is this zone. All you have to do is to go to your 3-minute time frame, preferable 3-minute time frame, and look for your short selling scenario by looking for a market structure shift on the 3-minute time frame and cover up at this a selling scenario at this point. The strategy recap is: look for your 4-hour short-term highs and lows first. After looking for your short-term highs and lows, mark it and go to your 1-hour chart. Look for when price sweeps the 1-hour short-term highs. Maybe you are looking for a bearish scenario into the 4-hour order block, and look for a selling setup using the 3 minutes time frame entry, and look for a selling off at the liquidity pattern, the start of the liquidity pattern, probably the start of the liquidity pattern, and look for your selling off. This is what the Larry Williams liquidity ABCD patterns entails. So that is it for this video. Thank you. All I will say is for you to watch this trading video. If you don't understand what I'm saying, watch it over and over again. You will understand what I'm saying. And if you ever skip this video, you are not going to understand what I'm saying. So I will advise you to watch the video. Now in my upcoming video, I'm going to talk about Larry Williams' second type 2 most profitable trading strategy, using the liquidity rate into the 4-hour order block, which is the type 2. I will advise you to subscribe. You are going to use the 2 liquidity pattern together by simply following the 1 or 2 liquidity pattern of the Larry Williams trading strategy, and look for a buying or a selling scenario. So stay tuned. So that is it for this video. Thank you for watching. Stay blessed.